Hey folks, Jordan with my strategic forecast Inside the Numbers Live. And I wanted to take you through one of the stocks on the move trade that we had as we get towards the end of the year. It was an interesting trade because it actually ties into the headlines we saw with all of the airline kerfuffles and stoppages and cancellations. Because for 2 days in a row, I had a shot at trading Southwest Airlines, but it wasn't until yesterday that I actually was able to pull the trade off. So let me show you what happened. I zoomed into a 5-minute chart, and the blue lines represent the different levels that David provides in the pre-market that we use to trade in the live room and others trade through his services. And the first level that I was looking at was $33.10. And within the first 5 minutes, the stock came right into it. So I went ahead and bought a full position there and was willing to add at any of the other levels because my ultimate stop was, I believe, down at $31.50 on hourly closes. What that means is that I would be willing to buy and use my average entry price, right? So if I bought at $33.10 and then $32.45, my average entry price would be somewhere in here. And I trade against that price rather than each of the individual levels. That's a personal choice. Some traders will actually trade each level independently. Nonetheless, hourly closes mean that I would wait until, say, 10:30 or 11:30 for closes below $31.50 before I would call the trade wrong and stop out for a loss. So in this particular one, I went ahead, bought my position at $33.10, and it hit my first target pretty quickly, actually. Went up to around $33.35, and I took off about 2/3 of the trade. I was looking to see if I could take off half of what I had remaining above the high of the opening 5-minute candlestick. Unfortunately, it came up about a penny or two short, and I wasn't able to get out of it. But I wanted to make sure that I locked in my profits, so I stopped out on the remainder at break even. Now you can see that the stock traded around the level and ultimately broke through as the day progressed. This is why, once we talk about getting one bite at the apple, we don't want to come back in because it can ultimately break through and keep going, and that's not something we want to have, especially in a bear market. Now, let's compare this to what had happened on the prior day and see how that one turned out to be a no trade. Now, this chart is Southwest Airlines from 2 days ago. And this is one that David talked about in one of his videos. You'll notice that the low on this candlestick is $34.02. And the price level that I had was $34.02. Now, sometimes you'll get filled on these, sometimes you won't. I had an order in, and it didn't fill me because the low tick was exactly at $34.02. When that happens and it trades away, that becomes a no trade because effectively the trade has already done what it was supposed to do. I just simply couldn't get a fill. It happens from time to time. In fact, it happened with me on the SPY yesterday as well. Whenever I run into a situation like this, I ask myself whether the trade has worked and played itself out, whether I got into it or not. And if the answer is yes, then I go ahead and move on to the next trade. Some traders will try to take a second bite at the apple, and you can see that sometimes it works and sometimes it doesn't. But the probabilities are much higher when you do it the first go around. So for me, this became a no trade because I can always look for another one out there because there is always another trade around the corner. So there you have it, a quick peek to Inside the Numbers Live. We have a 7-day free trial for anybody that's interested, so you can check out the room and make sure that it's right for you. Click on the link in the description below for more information. My name is Jordan with my strategic forecast Inside the Numbers Live, and thanks for joining me.